Welcome to Smart Stock Watch. Today is February 26, 2026, and we're diving into the latest earnings report from Bank of Montreal. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Bank of Montreal has just released their Q1 2026 earnings report, and there's a lot to unpack. Let's get started.
Earnings coverage ratios. Let's begin with the earnings coverage ratios. Bank of Montreal reported an interest coverage ratio of 27.56 times. John, what does this tell us about the bank's financial health?
This is a strong indicator of financial health. An interest coverage ratio of 27.56 times means that the bank's earnings before interest and taxes are more than sufficient to cover its interest obligations. This suggests a robust ability to meet debt obligations, which is reassuring for investors.
And what about the dividend coverage ratio of 23.90 times?
Similarly, the dividend coverage ratio indicates that the bank's earnings are well above the requirements to cover its dividend payments. This level of coverage provides confidence in the bank's ability to maintain or even increase dividends in the future.
EPS performance and analyst expectations. Now, turning to earnings per share, Bank of Montreal reported an adjusted EPS of 2.35 cents, which matches the forecast by analysts. How significant is this, John?
Meeting the EPS forecast is always a positive sign. It shows that the bank is performing in line with market expectations, which can help maintain investor confidence. With 3 analysts surveyed, this consensus indicates a stable outlook for the bank's earnings.
Operational efficiencies and future outlook. John, let's discuss the bank's operational efficiencies and future outlook. The earnings before tax were reported at $12,037.26 million. How does this position the bank for future growth?
The strong earnings before tax indicate that the bank is managing its operations efficiently. With interest and dividend requirements well covered, the bank is in a solid position to reinvest in growth opportunities and navigate any economic uncertainties.
And how does the exchange rate factor into their performance?
The exchange rate of 138.92 per $1 reflects the bank's international operations and currency management. Effective currency management can mitigate risks and contribute to stable financial performance.
Key takeaways. In summary, Bank of Montreal has delivered a solid performance in Q1 2026 with strong earnings coverage ratios and meeting EPS expectations. John, any final thoughts?
Overall, the bank's financial health appears robust, and its ability to meet both interest and dividend obligations is commendable. Investors should feel confident in the bank's stability and future prospects.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Bank of Montreal's performance in the comments below.